Okay, here we are trying again to go over exercise 24-10 clone, a proposal to replace a manually fed machine with a fully automated one. And you have to have apples to apples in the number of years each choice represents. It so happens conveniently, as this is our first choice of this kind, that the years of estimated life for the new machine is the same as the number of years remaining on the old machine. So it would cost us $111,000 to buy a fully automated machine, and that goes in the replace column. Obviously that cost only happens if we buy it, and we're going to compare each type of cost for both machines line by line to see what the difference would be from making these choices. Okay, for instance, after we've looked at the cost to replace choices, let's try the background color here. Okay. Yeah. Okay. Direct labor is only a factor on the manually fed machine that might be kept. We estimate $40,000 a year of direct labor, 5 years remaining life. That's $200,000 that only happens if we keep the old machine, because the new machine will not have people doing the same work. The next line is power and maintenance, and this guy here, and we'll give that a light blue. 5 years of power and maintenance costs for the old machine's only $40,000, about $8,000 a year, and it's about $30,000 a year for power and maintenance on the new machine. Taxes and insurance, $20 on the old, $35 on the new, higher value, so forth. That's in the area of operating costs. That's to keep each choice running. The next category that we look at in this type of decision is what's called shutdown costs. If there is a value on the new machine, should they get rid of it, that would go in the appropriate column as a positive or a cost reduction in the replace column, but there isn't in this case. They tell us, the book tells us, that there's no residual value on the replacement item. However, there is $5,000 we could be getting if we got rid of the existing manually fed machine, which is a cost reduction in the replacement choice. So that $5,000 of cash in or cost reduction would go in the replace column, because it only happens if we get rid of the old machine. So now we have all the line items, and we go to each column, we total them up. In the keep column, existing manually operated machine, we have 200 of direct labor, 40 of power and maintenance, 20 for taxes and insurance, for a total of $260,000 total cash out over 5 years. On the replace choice, it costs us $111 to buy it, $150 in power and maintenance, $35 in taxes and insurance, less $5,000 coming in from the sale of the old machine, for a net total cash out cost or total expenses over 5 years of $291,000. So if we look at the $260 versus the $291, it would actually save us $31,000 over 5 years to keep the old machine. So low-tech rules in this case. Spock out.